Okay, so it's 7:37 in the morning, and I'm a little under the weather, but I'm still gonna make this video. The main reason why I'm making this video is because I took a swing trade on Walmart that I'm showing you here, and I want to just go behind. I want to go over like my reasoning, right? So first of all, you see here, I got a regular pullback into a demand zone that I always take, regardless of the time frame. Right here, you got some rallying from the middle of July, and then finally we get like this basing candle. The following candle after that is a nice bull trend candle that engulfs the previous basing candle, which constitutes this whole entire area as a demand zone. So the market does what it does. You see here it rejected off of this weekly zone. So if we go to the weekly time frame, we see here we got a weekly supply zone, right? Basing drop, we reject it right out of it. You go to a smaller time frame, we got some more supply, and so this is what allowed the price to drop back down right into this demand zone. So I got into this trade on Friday. I'm gonna show you here on in my Discord. This is where I document everything. This is where I pretty much keep a track record of every single trade that I take. You see here, this is where I got filled. So this is the same setup. This is how the chart looked when I entered the trade. The price was at 96.32. And if we go to the actual chart, you see here is that pre-market is at 97.04. So currently I'm up on the position. On Friday, after I entered, I'm gonna show you when I got filled. So this is the screenshot on my phone. I got filled. See Friday here, 11:31. I bought one contract that expires in now like 25 days, 25 days, because yesterday it was Labor Day and the market was closed. So you see here I bought it for 98 cents, which means that's $98, and it says plus one quantity. So that's one contract at $98. So roughly, let's call it $100 on Friday that I bought. I got a month to wait for it to expire. So how long will I hold this? It all depends on my percentage gain, what I'm comfortable with gaining, and where's the next big imbalance that it could hit, right? Now the reason why I say the percentage gain matters is because I only have one contract, and as we know, I talk about this in my other videos, you don't really want to trade and invest with one contract, because now it's gonna be hard for you to scale out of the position. You see what I'm saying? What I mean by scaling out of the position, I mean being able to pay yourself as the market makes money available to you. So for example, so you see I got this bull candle at the end of the day on Friday, right? I got in at 11 o'clock. The market closed at 4. At 3:50, I could have closed this contract for 18% gain, assuming I had another contract left to run up for whatever, I don't know how far this gonna run. Maybe it hit this supply zone again up here. Maybe it hit this, maybe it stopped at this little gap fill right here, whatever. So I don't know, but maybe when they get here is when I sell the other contract. So the reason why I only bought one contract is due to my account size. It's due to my my position size. So I'm starting off with an account that I want to grow with, using only my max position size is going to be $200. So you're going to see a repetitive pattern of me only using anything less than 200, maybe 250, but really 200, to see what my percentage gain is going to be after that. So yeah, I wanted to go over this trade. You got a demand zone. I patiently waited for the pullback. Now my confirmation to enter the trade was this bar right here. We got this bullish pin bar. It's a bearish candle, but it's a bullish pin bar because of the lower wick. If you look at the lower wick, that lower wick is where those unfilled buying orders got filled, right? So this lower wick means that the price was basically all the way down here at 95.42. But the reason why at the end of this day the candle shot back up and closed up here is because of the buying imbalance, or in other words, those unfilled orders that got created in this price area. they ended up getting filled, along with retail buyers that, follow along with the wave, such as people like me. So simple trade, same setup that I always take. Like, it's plenty of other trades that I could take, plenty of other setups that I could take. But over the past 4 years, I've seen what works for me. I've seen what I'm comfortable with. I like to buy pullbacks into imbalances, whether it's a supply zone or demand zone. Now, I may seem a little call biased, meaning like I'm always betting on the market to go up. I'm always buying call contracts, but I'll buy puts when the time is needed. Recently we've been in a super bull trend for for a minute now. So it really has been no reason for me to be on the bear side of things, meaning like betting on the market to go down. But yeah, I'm taking advantage of the bull market, pull backs into demand zones. I'm finding my demand zones, waiting for the price to pull back into it, waiting for confirmation. This is my confirmation, so I'm gonna highlight this. Right, we gotta have some kind of confirmation. And then also, this is my confirmation as well too. So we got this green bar that closed inside of this bar right here. This is like a bullish Harami pattern a little bit, we can call it that. But I also want to show y'all the weekly time frame. So this is what's going to help me determine how long I'm gonna stay inside the trade. Yeah, some time real quick. I don't know what's going on. Might be because I'm outside. Damn. Damn, it's crazy. But yeah, so this pin bar right here, this bullish pin bar right here, if we look on a weekly time frame, which is a higher time frame, it's the same candlestick, but even more bullish. So I'm about to show you here right now. So if we look on a weekly time frame, look at this. Let's zoom in. Look at this candlestick right here. No, I don't care about this. Check this out right here. Super, super, super bullish pin bar right here. The reason why is because look how small the body of the candlestick is. It's super small, right? Super bullish. So we can assume, let's look at the last time that candlestick happened. Look at the last time that happened, right? In this 1 week, it looked like what last week looked like. And look at the following week. We got this big old bullish candle right after that, because this right here is bullish confirmation. This right here is a bullish candlestick right here. Same thing over here, right? Same thing over here. We got the following week to be bullish. And that's really all we need in order to take advantage of the market. So I don't need, to wait for hella candles to print on the screen. I just need one candle, because that one candle will be a series of days. And maybe that series of days is what make it to come back up here, right? So that's why I say trade on one contract kind of like tricky, because you don't know whether you can't hold a runner because you only got one contract. That's why you need to be trading with more than one contract. But in this case, I'm way below my max. Position sizing, which is 200. I showed you I bought a contract for $98, so that's gonna call it 100. And we're gonna rock out with the 100, whatever. I'm already up 18%, so that's $18 off this right here. Maybe in the morning I'm up more, because look, the contract that I bought, the strike price is 99. We already at 97. 99 is here. So I'm waiting for it to get here for my contracts to be in the money. And I really feel like we should hit that right there. I'm not gonna lie. But my assessment of how far the market can keep going is another skill that you have to gain as a trader, right? How soon will you take profits? How long will you allow your trade to run? How far do you think it can? How far do you think it can keep running? So all of these things are objective as well too. So just wanted to go over this little trade, simple trade, man. Same setup I always take. If you want to tap in with me, DM me on Instagram or comment on YouTube, and I hit you up. We can talk about stock setups and stuff like that. But this right here is a swing trade. The reason why it's a swing trade is because I'm holding it for a couple of days. You know what I'm saying? I held it on Friday. May potentially hold it today, depending on how the market looks. May get like a little pullback that scare people. You know, create another doji where we got a lower wick, close. You know, I'm not really tripping because it's, once again, it's $100. My max position sizing is 200. So I'm straight, right? And now where's my stop loss? Now, because I entered the trade here, my stop loss is at the bottom of the zone or a little bit below the zone. And this is where I can take profits at. You know, an entry, like I say, stop loss down here. I can take profit. I got all of this room to take profits, right? The next big imbalance, I got all of this room. As you can see, the ratio about 4 to 1, 5 to 1, 3 to 1. So great risk to reward trade. You know, if I do take a L, it's not an L based off of a bad decision. It's a natural loss that occurs in my strategy, and I'm willing to take that, right? But a little under the weather, but still able to trade, man. Still able to work. All right, y'all. So I'm back. It's 5:40. You see the time up here. Remember this morning I was showing y'all my setup from the swing trade I took. We'll go to the Discord. Matter of fact, let me do something real quick. Let me screenshot this just to have like a little before and after. You know, that's my daughter right there. That's my dog, TJ, right there. So remember my swing trade that I got into, this is Walmart. Remember, August 29th, so last Friday, this is how the chart looked right here. Right, I got in after the basic candle got put in 2 days prior to that. And I gave y'all my bias, my mindset this morning. I showed y'all that I bought the contracts at $98, so I spent $98. And this is how the chart looks now. So we're gonna just go back to the chart. This is how the chart looks now, right? So what a day. We made money. I got 24 days left on the contracts. So, you know, I got some time to hold it. This right here is very bullish. Remember, I talked about how this weekly candle right here was, you know, it's creating a demand. You know, it got a doji, bullish doji candle, right? So that's very bearish. Very bullish for me on a weekly time frame. Mind you, it's only Tuesday. It's the beginning of the week. So, you know, who knows how much further it could go up. Now, I'm going to show you how much I'm up. I'm up 53% today on that stock. That ticker Walmart gave me $34. Remember, I only spent $98. Mind you, I told you I was up 18% prior to the beginning of the session this morning. So 18%, roughly like $18. If you do the math on that, you get 52. 53%, $52, that's about half of $98. You know what I'm saying? So you see how the math correlating, right? And the account's small, but it's gonna grow. I'm gonna keep documenting it. Just wanted to show y'all like the trade worked out. Now there is a high chance that I might close the trade out in the morning. Reason being is because the account size is small and I do have one contract. So remember, I told y'all about how it is when you trading with one contract. A rule of thumb when you're trading is always pay yourself as the market makes money available to you. Only way you can do that is if you have multiple contracts, right? So I don't want to be greedy. Yes, I do want to follow my plan, and I will follow my plan. I know I'm not creating a bad habit of, like, you know, taking profits when I'm not supposed to, but it's a high chance that I might close out this trade in the morning. I'm okay with the profits that I got. And we just gonna look for the next swing trade, right? So this was a good trade. I mean, regular setup. Pull back into the man out. Also, if you look in the screenshot, I took a day trade. You see I made $19 on SPY. That trade went 70%. I'm gonna show y'all how and what my mindset was when I took this trade. So I got into this trade. I think I marked my entry. There we go. I got into this trade this morning after seeing a bullish Harami pattern. So we got this bear candle the first 5 minutes, followed by a green bar that closed on the inside of that bear bar. This right here, this pattern right here, is called a bullish Harami pattern. So we can just bullish, oh it's not, Harami. So as you can see here, small green bar closed inside of a bear trend bar, bullish Harami pattern. Normally when you see this, the probabilities of the market or the asset that you're trading going up is higher. So just me having screen time for the past couple of years, when I see this, I know how to react to it. My stop loss was the low of day, right? Bought one contract, about 15-20 minutes, let it ride out, closed at the high, and that was a smooth trade. I saw that just scoping out, seeing what my I always watch the indexes, right? So that's how I saw it. And also, if you look here, it bounced off of a daily zone. So I could have swung this right here. I would have been up crazy had I swung this right here. I didn't, but it's okay though. We're not tripping. After hours, you see it's going up. My main focus, once again, was Walmart, right? We rallied out of this daily demand zone, and it's going to show you the power of supply and demand. Sorry, I'm under the weather, but notice I don't have any indicators on my charts, right? No indicators on my charts. I'm strictly using supply and demand, right? And it's just the power of it, the significance of how the market moves, right? If you can trade and invest in a way where it reflects how the market moves, and you just keep your psychology intact, your risk management intact, you should make money over time. And I just wanted to come back and follow up with the trade, right? Swing trade, you see, one contract, 53%. Might close in the morning. And we just gonna build this little account up, get it to 10K. And I'm gonna document every trade I take. You feel me? So, and mind you, this started off looking like this. So, we